city. I'm Doug Moore. I have Carrie Shea with me and Ali Ajazi. This is your primary audit engagement team. We have a number of years of experience with the city over the years doing the audit, and really, when we exit tonight, if you have any questions with respect to the material that we covered, any one of us would be pleased to help with any questions that you may have. In addition, obviously Misty is here as well. She was an integral part of the audit, and Jeff on the golf course side, so they're obviously available for questions as well. And they've been very good resources for us because they're here day to day. You know, we come in for a period during the year, so we're not involved on an annual basis necessarily, and so they're a good resource for us and as well as for you. So in your packets tonight, you really should have 4 items. And so, first of all, you would have the financial report with supplemental information, which is probably the thicker report, which is your audit report that's bound, double-sided hopefully, so we're saving a little bit of paper. There's also 2 letters in your package. And so one is really an internal control type letter, which Ali's going to walk through on the tail end of the presentation. And then there's a second letter that's a little thicker, and this covers a number of things related to the audit, as well as some other value-add service suggestions and some legislative items that Carrie and I are going to walk through in the course of the presentation as well. And then also in your packet is a graph package. And so this package primarily focuses on the general fund, but we do touch upon a number of the other special revenue funds as well. And so Carrie's going to walk through the majority of the content of that package, and we'll do a little fuller commentary as we go through. If you have questions, I think you should ask them as we go through versus hold them to the end. So if you have a question on a particular slide that we walk through, if you would ask those questions, that'd be terrific at the time that we're going through those. And then in addition, we're not going to cover tonight, but we also do a separate audit of the district court and also do a internal control letter with respect to the court. The court audit went very well again this year. Vicki Bowman and the judges do a good job of getting the records in good shape. And that report is a separate audit. It's a much smaller audit because there's really just 3 agency funds at the court. And so that's something also that's done on an annual basis and submitted to the state. So with that said, let me start with just a couple overview comments as we go through the slides tonight. So when we met in December, we kind of went through a point in time of where did we stand as of June of 2012. And we walked through a number of the challenges that kind of led us to where we were at that point in time. And it was something that was really cumulative over many years. We were dealing with some structural deficit situations. The general fund was in a deficit. And we were starting to really experience some cash flow difficulties as well in the last couple of fiscal years. So when we move forward to 2013, the picture is a little bit more improved. The general fund had a pretty good year. There's a couple reasons that it had a better year than maybe we would have expected, and we'll talk a little bit about that. We still do have a deficit in the general fund that's considerable. The deficit elimination plan has been updated to address getting rid of that deficit over the remaining time period. And there's a couple, maybe more than a couple unknowns that are out there that also could potentially have a negative impact on the general fund, and we'll talk a little bit about those as well as we go forward. Some of those which you can budget for, and some we just have to really stay tuned into. You know, for example, personal property taxes, or what's going to happen on the personal property tax side. Carrie will talk a little bit about that when we walk through this letter a little bit later on. So tonight really is meant to be interactive. It's not meant for us to be up here talking to the audience and just having you listen. So, you know, we appreciate the questions. If you need some clarifications, we certainly can do that. And again, this is the information that we thought would be most useful to you as part of the presentation that we put into the slides. But if there's other things after you've had a chance to, if you haven't already, look through the financial statements and have questions later, we certainly are available. Let me talk a little bit about the general fund, and then Carrie's going to come in and jump into the slides here. So when we get into the slides, you're going to see that the general fund still has a deficit of about $2.3 million as of June of 2013. That is substantially less than where we were a year ago at June of 2012. So we can make progress on that. We are following that deficit elimination plan. And so that progress needs to continue. So if there's a message tonight, it's really a little bit of optimism, but also a lot of caution as we continue to budget through 2014, 2015. And so when we walk through a couple of those unknowns that are there, that's the reason I talk about caution, because those could be substantial in dollars, and we need to make sure we're thinking about those and having contingencies for those if they're going to come into fruition down the road. And we'll talk specifically about what those are in a minute. So if you can keep that theme in mind, more optimistic but very cautious as we walk through the slides, I think that'd be beneficial. With that, I was going to have Carrie come up and walk through the slide packet here, and again, if you have questions, we can certainly address those as we go through.
Thanks, Doug. So we're going to start off, as Doug said, looking at the general fund from a couple different perspectives and tying it up with fund balance, and then we'll move on to some other things that we think are crucial for you to think about as you go forward as a council. So the first slide looks at your general fund revenues, excluding any interfund transfers over the past 3 years. It is important to note in the asterisk, so if you look from 11 to 12, you'll see a huge decline of $11 million. Well, there was a decline of revenue. The main reason for that is the building authority and the TDA Act 179 rubbish activity, the millage and related expenses were included in the general fund in 2011. In 2012, they were moved out to their own separate funds. So their revenues and expenses exist, they just weren't housed in here. So it's best probably to look at 2012 to 2013. If you look at the first line, that's your federal grants line item. Over the past several years, there's been minimal grants that affect the general fund. The city as a whole has a lot of grant revenue, but it doesn't all get recorded here. You'll see the spike from 2012 to 2013 of about $2.4 million, and the majority of that is the SAFER grant revenue that came into play in that fiscal year. So that is a 2-year grant, if I'm not mistaken. And so that is a short-term revenue boost for your general fund, and something we'll talk about at the end that you'll have to start thinking about, what are we going to do with those employees at the end of those 2 years, but for now, that is part of your increase in the revenue for this year. If you continue to move down on the property tax line item, there's a lot of moving parts in that property tax number. So I'll do my best to explain a couple of the ups and downs that happened there. It looks pretty stable from last year, but I'm sure you're aware that the taxable value is still continuing to decline, and your mill rates have really stayed the same. And what is going on in that is there's other factors, which we talked about at our mini seminar, so the MTTs, the Michigan Tax Tribunals, and your chargebacks that get charged back from the county for the ones they don't collect for. There are changes in those estimates every year, and so the liability changed this year and went down a little. There's still a substantial liability sitting out there, but you were able to scoop some revenue into the general fund because of that change. So I want to call it a one-time source of revenue. That may continue to happen. It may go the other way, but that's part of what's offsetting what you would see as the normal decline in that line item number. The other item I wanted to point out was on the charges for services, so that's the orange portion of your bar charts, and that decline is really the ALS revenue, is the bulk of that. It was about $700-some thousand that it declined from last year, so that would explain that piece of it. The last item that I wanted to highlight was the other category. There are it's other, so it's kind of the catch-all of the other things that don't get classified. So there's a variety of accounts in there, and there's a lot of different things that spiked on their own. But the main items would have been some of the charges to other funds. So you charge, the general fund handles a lot of the operations of the city that affect the other funds. And so they get reimbursed from those other funds for those services. And so there were some increases from the water fund and the building fund to reimburse the general fund this year, as well as the SMART grant revenue increase as well. So to kind of,
Carrie?
Yeah.
Question on that, you got the 2011, we were at 51 million, and then you got the decrease in 2012. Is that reflected back in 2015 or 2013? You know,
It has remained in its own separate funds.
okay. Do we have a detail in there of what those funds are?
Yes.
Yes.
Okay, so that'll be there. Okay. Thank you.
You're welcome. Any other questions before I move on? I was just going to say before we were going to talk about a couple of the main revenue items, but so overall, as Doug said, it looks like there's an increase. The majority of your increase is really your SAFER funding and a couple other one-time items. So It's not that we're necessarily operating in a new $44 million general fund revenue stream. So keep that in mind as you're going forward and looking at your budget. One of the reasons, and this graph will may be familiar to you from past presentations, but I think it's still important. As we talked about the taxable values decline for you this year, the anticipation is that in 14 there still will be a decline. So you haven't hit that bottom yet where you're starting to even see the inflationary benefits of increasing. And so this is trying to illustrate that if you do hit your bottom in fiscal year 14, it will take beyond 2022, you still will not even be at your highest point that you were in 2008 when we saw the decline. So it will be a long road to get back to where you were operating just 5 years ago.